Good morning, members. I'm Anthony Rodwell-Ball, Chief Executive of NGS Super, and I'm about to deliver the board update for the November 2011 board meeting. The board and its various committees met on the 28th and the 29th of November, and the current economic climate and share market volatility was again front of mind at these meetings. Let me review the current challenges, but first let me say that the overview that I'm about to provide doesn't take into account your personal circumstances, so any general observations that I may make about markets and economic trends should not be relied upon in determining your own financial circumstances. Please ring 1300 133 177 for more information. So what's been happening with recent market and economic developments, and how is NGS Super responding? The past few months have seen the re-emergence of risk as the major focus of financial markets. First, it was the fears of a double-dip recession in the United States while Congress fiddled. Then there were resurgent fears of China having a hard landing after many years of double-digit growth. But of most concern was the spread of the European debt crisis beyond the smaller economies to engulf the much larger and much more significant economies such as Spain and Italy. These concerns have led to ongoing volatility in share markets, are very widely reported, and I've addressed the causes and drivers in previous videos. But what is the NGS Super Board doing to address the issues? In summary, the board believes, firstly, that share markets still continue to represent good value, with corporate balance sheets and particularly profits in much better shape than they were in 2008, both here and overseas. In sharp contrast to riskier assets like shares, safe government bonds have rarely been more expensive than they are today, and as a result, shares are exceptionally cheap relative to bonds. But both bonds and shares have a place in our diversified portfolio. So it is important in the default or diversified option to continue to invest in a diversity of asset classes as a means of better managing both volatility and risk. This means for us looking for and investing in quality assets that are not correlated with, not in sync with, share markets, or in markets that are less correlated with or influenced by the major stock exchanges. It also means that NGS Super encourages all members to review their current investment choices and, if in any doubt, seek advice from either the helpline advisors or the team of in-house financial planners who can take personal circumstances and, more importantly, an appetite for risk into account when setting a personal investment strategy. Please call 1300 133 177 to discuss any concerns you may have and obtain any necessary advice that you feel you may need. The board also reviewed and discussed a range of other matters, noting the following. Firstly, minor restructures of the Australian and international shares portfolios, with some fund managers being terminated and replaced, and others placed on watch. This is undertaken in order that we can leverage off the opportunities that exist and better manage the risk and the diversification in the fund. Secondly, the successful placement of term deposits with a number of subscribing credit unions and mutual banks, and the good interest being achieved with these placements. NGS's inclusion in the Super Ratings list of top 10 super funds in 2012, a very pleasing result for the fund. A full review of the benefit payment process conducted by the Risk Audit and Finance Committee as part of its risk mitigation agenda. The successful launch of the social media campaign in October and plans that we have to develop this initiative further. The Investment Committee meets again on the 19th of December and the Board in early February. And finally, on behalf of the board, management and staff of NGS Super, I wish you compliments of the season and a happy and more prosperous new year. Thank you for listening.